to recourse bank financing, and meanwhile there are a huge number of these companies, and when we jumped in and started looking for opportunities, we were shocked at how many there were. So at this point we've made about 20 investments in the past couple of years. Examples include Be Good, which is a Boston-based fast casual, Gregory's Coffee here in New York, which you may know. And maybe I guess taking Gregory's as an example. Gregory's sort of looks like the following with respect to their units. It might cost around $400,000 to open a unit. They might do an average of around $1.5 million in revenue. Might do that at around 20% margins, which yields around $300,000 in cash flow at the unit level. On a $400,000 cost, that yields around 75% cash on cash, which is, from at least our way of thinking, extremely attractive. So the idea behind Topline was finding a way to invest in these companies and find a way in particular to capture some of that cash flow, which we've done by creating unit-level transactions where we provide the capital required to open the unit, the restaurant company operates them on our behalf for the life of the restaurant, and we capture the bulk of the cash flow, the restaurant company keeps a lesser amount, fee for operating the restaurant, and so forth. So as we got more to this business and started developing a deal flow that really started to outstrip our own capabilities, and at the same time found that other investors, institutional investors, high net worth investors, et cetera, were extremely attracted to these assets. It became clear that there was something bigger to do here. And so that's why we created Topline, and that's why we'll hopefully be launching in the next 6 to 8 weeks. In fact, speaking of investor interest, one of our partners in Topline is a family office based in Philadelphia with around $500 million in assets that has invested with us at the asset level and likes the product so much that they've pushed us to be a part of the platform itself, and believe that their network of high net worth investors and hedge funds and so forth will be a great source of distribution for us. So Topline is exchanged first and foremost. There are some features of Topline that we think make it particularly interesting. One is that restaurant companies today use POS systems, that is point of sale systems, that allow for remote access to sales data on a real-time basis. So one of the things that we can offer investors via what we call our dashboard is real-time sales information relating to investments they make. You can literally get online at any minute and see from minute to minute what kind of sales a restaurant in which they've invested is doing, which creates a level of transparency in a private asset class that's unprecedented. In addition, we've created a slight tweak to our sort of basic investment structure, and that is that when an investor finances a new restaurant, will be entitled to a percentage of the revenue produced by that restaurant, as opposed to a percentage of the profits or something like that. And that creates, along with regular, monthly, long-time cash flows, just a tremendous amount of transparency and more debt-like characteristics, along with more equity-like yields. So, from Topline's perspective, the path forward is pretty clear. We will have done around 20 units in the past year. We think it's pretty straightforward to expect to do 30 or 40 units in the next year, 50, 60, 70 maybe the year after that. We're averaging up to several hundred in a few years. Along with that, the model is to do transactions where Topline is entitled to receive a percentage of the sales and/or profits produced by each restaurant funded on the platform. This creates for Topline an extremely sticky, long-lasting cash flow stream, a high-margin cash flow stream that, when combined with the scale that we think we can achieve, given the incredible size of the restaurant business, which as an aside is one that no crowdfunding platform has emerged yet to try to take a piece of, makes Topline a pretty exciting endeavor, and so we're very much excited to continue building it out here. So I appreciate it, and happy to answer any questions.
This is very interesting. It looks so. Topline is really a crowdfunding platform focused just on the restaurant and hospitality space. So, and tell us a little bit about your investment process. How do you? I mean, the key is selecting the winning restaurants. Tell us a little bit about how you do that.
That's right. I think our first gating question is do you have a number of units that are already up and running? We're not interested in one-off restaurant companies. We're not interested in first-time situations. We're interested in situations where there's a proven, established model for operating where opening a new unit really is a relatively straightforward matter. And then beyond that, it really comes down to the economics of the model. At the unit level, we need to see attractive profitability and cash flow, along with a very tight operating team and operating system that is conceived of more as a business as opposed to sort of a passion project. We're fortunate that there are an enormous number of emerging restaurant companies in the U.S. To choose from, and it's an area that's been historically overlooked by some of the investment community, which gives us the ability to be pretty choosy when we do this.
And when people invest, they're investing in the restaurant through the profit they invest in a restaurant or in a general pool for multiple restaurants.
Right this second, I think we'll likely create a structure where investments will be specific assets, though it will be quite straightforward to spread money around a little bit and make multiple investments in multiple restaurants to achieve some diversification that way. But the basic idea is for an investor to literally own a piece of a specific restaurant, i.e. a Gregory's on 40th Street and Mass Ave.
We're talking about the dashboard and point of sale system. I just want to reiterate something that I find very interesting when I hear about this presentation is what they're doing is they're affording investors the opportunity not to get a percentage of profits, but you can actually get a percentage of the till, right? So if a restaurant is going crazy and having a crazy day, you can actually log in and see how the register is doing, and you can see what percentage your take is in that till. That's a very novel product you're offering.
It is. We have a partner who likes to refer to it as reverse franchising. People often will say to themselves they'd love to own a Dunkin' Donuts or McDonald's or something like that. I would much rather own the franchisor of Dunkin' Donuts as opposed to being a franchisee of Dunkin' Donuts. And we put ourselves and our investors in the position of becoming franchisors essentially because they're taking dollars from the top of sales as they come in as opposed to the bottom.
Thus the name Topline Exchange.
And are you looking for, tell me, you're here now, are you looking to promote the platform, or are you looking for funding for your company too, for the platform?
What's the answer to that question?
The answer to the question is we'll talk to anyone here who's interested in talking to us about either of those matters.
How big is it? Big?
Well, look, I mean, I think Wade hit on the fact that just naturally from our own system, we've done 20 units. We have a pipeline of being able to do double that next year, and that's just in due course without really extending our relationships. If we started doubling our relationships and started growing out the G&A of our actual company, we could imagine doing 100, 200 units a year. We can start partnering with franchisors of some of these concepts to finance their franchisees, and before you know it, you're doing 200, 500 plus units a year. When you do the math, an average revenue of a concept we're valued with is $1 million, sometimes $2 million in sales. We can call it $1 million times $500 million in sales. If we're taking 20% of the 10%, it's $10 million of revenue that year of sticky revenue, and then all the years prior, so if you get to 1,000 units, you're talking about $20 million of essentially profit of expense-free revenue, plus your $30,000 a unit for that year, which is another $15 million. So you can imagine year 4 having a business that's doing $30, $40 million in top line to TLX that has maybe a $7 million type G&A if we execute perfectly.
Got some more questions to the crowd. Sanjay.
So are you guys basically competing with private equity investment, or are you coming in at a level of investment that's much lower than where private equity would mostly come into these restaurants?
So the answer to the question is we're not competing with private equity because private equity wants to invest in chopped salad. You go down the street here, just on Hudson Street here, you'll see Dig In, you'll see chopped salad. We're opening a Gregory's Coffee. We own the unit of that store that we're opening over there. You'll see a Pret. Private equity is typically investing in those emerging concepts once they get to 10, 15, or 20 units. So if we see a concept that's 5 units that we think has a brand value that's already real, because we only want to be partners in units of concepts that actually have growth potential at the brand level, and I'll explain why on top of that. So we'll jump in. We'll jump in at that point and start investing at the underlying units. The reason why it's, I think, doubly exciting is that what we've kind of done is flip private equity on its head because we're taking the cash flow day one for the concepts and the monthly distributions, but we haven't pre-negotiated any sale of the underlying assets. So if at the end of the day there's a roll-up of the concept and all the concepts we're involved in have the potential of real exits, I think that on top of getting the revenue during this time period, we'll actually get a multiple at the event level in the future.
So you're more like a venture capitalist.
Well, in this particular situation, if because people aren't pre-negotiating the ability to buy us out upon a roll-up, there is the ability to go along and be dragged along or force ourselves to go along at an event, because a lot of people, when they do an exit with private equity, are going to want to take out our capital if we elect to go away. But we're not agreeing to go away day one, because no one's getting that to our control.
You know what, just, I'd like to move along. We have 3 other companies. These are Mitch Kahn, a friend of mine. Wade, they're here. Please, after the presentation, please follow up with them directly. One of the things we're trying to do here is take their cards, meet with them, follow up after this. The point of this session is to get the concept out and then do the individual follow-ups. Thank you.
Thank you so much for having us, Mitch.